Now I think I'm ready to talk and walk. I couldn't talk and type before. We journalize transactions. In order to journalize transactions, we have to know our accounting equation of assets equals liabilities plus owner's equity. With that, we have, excuse me, two other account classifications. We have our revenue and we have our expenses. Revenue expenses are our account classifications that we use to determine whether or not our business is profitable. All businesses have to have expenses. Those are things that happen in our business that we have to pay for, but we can't go back and charge the customer. The best one is, again, our example of electricity. When a customer walks in, we don't say that's 5 cents because the power's on. When they go to the bathroom, we don't say that's $1 for using our restroom. Okay? Things that you have to do, again, with the restroom, you have your supplies as well as water, light. In the wintertime, we have to heat our buildings up here. In the summer, we air condition. Those are things that we have to cover in the cost of our business, but we don't charge our customers directly for them. Once we've gone through and journalized all of our transactions for a fiscal period, and again, a fiscal period is going to be a specific length of time that a business decides that they're going to determine whether or not we've made money or lost money. Now, for a business, we're not going to wait 12 months to find out whether or not we're making money or losing money. Because isn't 12 months a long time to wait to see how we're doing? So when a business first starts, and if you're operating a smaller business, you're probably going to go through and do more like a monthly fiscal period, because then you can see whether or not you're making money or losing money. You would never go anything less than a month. A month would be the smallest increment of time that you would use to determine your profits. Another common way of going through common period would be a quarter, so every 3 months you can see how well you're doing. Or then you have twice a year and then annually. Every business has to every year go through and determine if they made money or lost money, because your revenue and your expenses are going to determine your net income, and your net income is going to determine your taxes, which the government wants to know your profit because they're going to want to tax your income. So, at the end of our fiscal period, the first thing we do is we do a worksheet, which is what we just did in Chapter 6. Our worksheet is broken into 4 separate sections. Trial balance. The most important part about a trial balance is if it does not equal, you stop right there and do not do anything else until your debits and credits equal. And let me tell you, some of you are going to have a difficult time getting your trial balance to equal after that reinforcement activity that we did. You remember that reinforcement activity? The paper one where you had to take your audit test? Okay, you journalized transactions and you posted them. You're going to be getting them back. I am specifically hanging on to them because I'm not going to hand them back to you, and then you're going to lose them, and then you have to redo the whole entire reinforcement activity in order to do the second section. So if your trial balance does not equal, you have to find and fix your mistakes. Next is your adjustments, and we are adjusting 2 different types of accounts. We're adjusting our supplies and our prepaid insurance because we have used them up throughout our fiscal period. We no longer have all of that value of supplies or insurance that we bought. After we have our adjustments taken care of, then we're going to go through and do our income statement and balance sheet. And again, all of our account classifications, when you look at an account, you should know its classification. It will then determine whether or not it goes on an income statement or it goes on a balance sheet. The purpose of an income statement is to see whether or not we've made money or lost money. And that's going to be our revenue and our expenses. The purpose of our balance sheet is to see if our accounting equation is in balance, which is going to be our assets, liabilities, and owner's equity. A worksheet is not a permanent financial statement. Okay, great, Mrs. Grass. I don't really know what that means. That means every year, for example, if I wanted to see how well Google stock is doing, they're going to create an annual report. In that annual report, they have to put out certain financial statements. A worksheet is not one of those. We prepare a worksheet to get all of our accounts in order to make sure that they're ready to prepare our permanent financial statements. Okay? Permanent financial statements are going to be ones that we could look at from year to year or fiscal period to fiscal period to see how well we're doing. So I can go online and look at Google's financial statements, and I can compare 2014 to 2013 to 2012 and see growth and progress and see what they're doing for income. Is that important for a business to be able to do? Yes. They have to see where money is going and how things are changing. As well as you as a general consumer, if you are thinking about investing in a company, isn't that something that you would need to see? There are certain rules and regulations that all publicly traded entities have to follow to make sure that what they report is similar to another company so you can compare. They can't make up their own rules, so we have our generally accepted accounting practices, or GAAP, that are going to go through and lay out exactly what people have to make in our financial statements so that way they can compare how well they're doing. And one of those financial statements that we're going to be creating is going to be an income statement. Now let me tell you, right now our income statement is really, really simple because we are doing a sole proprietorship organized as a service business. Sole proprietorship means how many owners? One. Service business means I don't have to calculate the cost of goods sold. And that's a whole big formula. What does that mean? If I am selling you this monitor, am I really making this monitor? No. So that means I have to buy the monitor for somebody. So down the road, when you create income statements, I'm going to have to go through and calculate the cost of the monitor, subtract the cost from the monitor from my sale, and that would be my profit. Because think about it. Everything that you buy in Best Buy, they don't make, right? They buy from somebody else and then they sell to the consumer. So in order for them to determine their profit, if they sold a washing machine, if the washing machine cost them $350 and they sold it to me for $400, they made $50. So that's why later on our income statements get a little more complicated. But again, in our happy accounting land, we start with nice simple ones and then we go more complex. So income statement is our first permanent financial statement. All of our financial statements are going to start on the top 3 lines with the name of our business, the name of the document, and the date. Now, when we talk about the date for our income statement, an income statement has to be for a specific period of time. I'm not going to go through excuse me, and calculate how much money I made on Monday, how much money I'm going to make on Tuesday. Does that make sense? So I'm going to do always a period of time. So when we look at the date on an income statement, it will always say for month ended, for period ended, for year ended. So the date on an income statement always needs to be laid out that way. And then below that we have lines. And then you will notice that lines we have indicated, we have a spot to write in our account titles, and then we have 2 columns for numbers. Okay, the 2 columns for numbers do not relate to debit and credit. It has nothing to do with debit and credits. We're going to have subtotals, or we're going to have individual amounts, and we're going to have totals. Your totals will always go in the far right column. And then we even have an even further right column that says percent of sales. And here's the important reason about percent of sales. When I go through and look, if I'm going to be doing a lawn care business, and Alex is doing a lawn care business, and we're competing. When we go through to compare, Alex's business is a lot bigger than mine, okay? He has twice as many customers. So therefore, people are going to assume his business is more profitable. Is that the case? No, because if I look at his income, and I compare my net income, his should be larger. Why? More customers, so he's going to have more revenue coming in. But what if I'm better at controlling my expenses? What we would go through to do is we'd actually compare our percent of sales columns if we're in the same business. And our percent of sales column allows businesses that are different in size to be compared because you're comparing percentages instead of total dollar values. So, for example, if he had $75,000 in sales this year and I only had $20,000, it takes away the larger number portion of it and really just gives me a percentage to compare to see which business is better at physically controlling expenses and generating revenue. Does that make a little bit of sense on what that percent column? It allows the accountants and financial people to look at your income statement and make decisions because there are some generally accepted percentages for each type of business. They're going to say, all right, a food service business, your expenses should be this percent of your net income. Okay, so that's why we always make sure we have that column. Now, here's one of the things that you're going to do is at the very bottom of our income statement, we're not going to know if our income statement equals yet. Okay, so a couple things that we can do. At the bottom of our income statement, our net income should equal the net income that's on our worksheet, correct? Okay, But we don't really know if that one's correct until we really do our balance sheet. So this chapter is relatively short, and I'm looking at taking the test next week, Tuesday, on it. Because of the power outage on Friday, it really would have bumped the test to Monday, but I was nice to you guys. I'm not giving you guys a test on Monday, but I'm giving them a test on Monday. So there you go. You're welcome. So there's only 2 sections to this chapter. So you will find already in Classroom, I do have the outline started for you. It's not going to be very long. Please make sure you take a look at that. Follow the rules for your vocabulary. Your vocabulary words need to be in a different color. Also, don't forget to use those bullet features. And when I take a look at your outline, I look to see, all right, do your bullets relate to the topic? But there's not a right or wrong 3 bullets that you need to put on there. It's really your opportunity to summarize what did you learn within those sections. Okay, so make sure you watch out for that. Ready to rock an income statement? Evan, you ready? No. Come on, Evan, are you ready? All right, Evan's ready, I'm ready, let's go! So our directions, work together 7-1, reads, a partial worksheet of Darlene's delivery service for the month ended July 31st of the current year is given below. Also given is a blank form for completing an income statement. Your instructor, that's me, is going to guide you to the following example. Prepare an income statement for the month ended July 31st of the current year. Calculate and record the component percentages for total expenses and net income. Round those percentages to the nearest 0.1%. That's important. Okay, so on the very top, name of our business is Darlene's Delivery Service. Name of our document is an income statement. And then we're going to say for month ended July 31st. Now, an income statement is going to have what 2 account classifications? Alyssa, looks like they're right on the tip of your tongue. Come on, give me one. I talked about them already. Revenue, and what's the other one? Expenses. So what we have to do on our income statement, we're going to start first with our first classification, which is revenue. So I'm going to write the word revenue followed by a colon and hit enter. So we are listing the classification first. On all of our permanent financial statements, we're going to be listing the classification, and below it, you're going to list your account. So this is very tricky, Tyson. Are you ready? What is my account that goes in the classification of revenue? Yay! Okay, so when we look at my worksheet here for sales, you can see that sales has a credit balance of $5,511. And I told you already that these columns do not relate to debit and credit. We have totals and individual amounts. How many revenue accounts do we have? 1, right? So my total for revenue, which is $5,511, is going to go on the right-hand side. Now, I am going to tell you this. In your book, you are going to have an example of an income statement in which there's 2 sources of revenue. For example, before Alex and we have our lawn care business, right? So let's say that I go through and I track my revenue separate for mowing lawn than in the wintertime I do for snow plowing. Would that be a good way for me to track my revenue? To go through and find out how much money did I make from snow plowing and how much money did I make from lawn care? So some businesses will actually take their revenue and break it into separate subsections like that. So you may have a sole proprietorship organized as a service business that will have multiple revenue accounts. If you do have that example, the numbers would then go on the left-hand side, and then you'd have to write total revenue, and then the total would go on the right-hand side. Does that make sense? But there is an example of that in the book for you. So we have our 1 revenue account listed here, so then I have to go with my next account classification, which is, Evan, hands on your own computer, expenses. And then when you're going through and doing your expenses, this is my tricky way of doing it. Every account that's listed here are going to go on your income statement. Right now, it's very simple because they only gave you this portion of your worksheet. If If you had your full worksheet, what you need to realize is what columns you look at to get your number. Your income statement column. Do not look at the trial balance. And why do I say that? It's already done, but what happens between trial balance and income statement? Adjustments. And if you were to take the numbers from your trial balance, it would not account for adjustments. So all you need to do is you're going to do advertising expense, insurance expense, miscellaneous and supplies, list them here, and put the amounts on the left-hand side. By default, when you put in your account titles here, I want to point out that right here under supplies expense, it put a black line here. The black line is important because you remember when you first learned how to add, like in first grade? You would do 1 plus 1, and then what would you do below it? A line. And that line shows that you did some type of math. This line right here also shows, hey, we're doing math. And look at the word here. It says total expenses. So what do I have to do? Add. So I'm going to add 821, 300, 347, and 713. And that total is going to go on the total expenses column in the right-hand side. When you filled in that number, what happened below that number? Another line to indicate, hey, I'm doing more math, because we're crazy about math right now. I know, unbelievable. So now, I have my total expenses here of $2,181. Okay? I have here my revenue of $5,511. I have expenses here. What type of math am I doing, adding or subtracting? Subtracting. Do I have a net income or a net loss? We know that because which one is greater? Our revenue is greater. If it was a net loss, this number here would be bigger, and then I would change this word from net income to net loss. So what is my net income for this income statement? You did. So our net income is $3,330. Now, the next thing that we have to do is we have to calculate our component percentages. Okay? Right now, it's really simple because you can tell where you have to put your component percentages, right? And that's what this column is, component percentages. You know you have to do here, here, and here. And now we have to do some dividing. You ready for that? So we're going to divide whatever component percentage we need by sales. Hence the name of the column, percent of sales. So this one's a really tricky math. What is 5,511 divided by 5,511? 1. Change it to a percent. 100. Would you agree? How many decimal places do we need? 1. So it's going to be 100.0. Does that make sense? Will all income statements have that? Yes. You're always dividing by itself here, so your percentage is always going to be 100 here. Now, I need to figure out my component percentages for total expenses. I'm going to take 2,181 and divide by 5,511. That's going to give me my component percentage. Do the math. Get your calculator out. Then I do the same thing for my net income. Calculate your component percentage with one decimal place. Type them in. You need one decimal place. 2,181 divide by 5,511. So what is my component percentage? $39.6. Because look at how you have to round it. Okay? Now you do the same thing. You're going to take 3,330 and divide by 5,511. Yes. For some reason, I have this assignment set as graded. Did not mean to do that. But go ahead and do your on your own.